Have you noticed that every time you buy something, there's another way to pay? Credit cards, debit cards, Apple Pay, Google Pay, PayPal, and now, America's biggest banks want to add one more. It's called Paze. At first glance, it looks like just another digital wallet, another app, another payment button, another technology that promises to make checkout faster. But if that's all it is, why are some of the largest banks in the United States investing so much money into it? The answer has very little to do with convenience, and almost everything to do with one of the biggest battles happening in the financial world today, a battle over how Americans spend their money, because every time you tap your phone, buy something online, or pay with a card, someone is making money from that transaction. The question is, who? And that question is worth billions of dollars every year. Today we're going to explain what Paze actually is, why banks created it, why it's making headlines, and what this says about the future of money in America. Because this story isn't really about one digital wallet, it's about who controls the way you pay. Let's start with something simple. Think about the last time you bought something online. Maybe you typed your credit card number. Maybe you clicked PayPal. Maybe you used Apple Pay. Maybe you used Google Pay. The payment only took a few seconds. Simple, fast, almost invisible. But behind those few seconds is an enormous financial system involving banks, payment networks, merchants, technology companies, and security systems. Moving money may look simple. In reality, it's one of the most valuable businesses in the world. Every day, billions of dollars move through digital payment systems, and every transaction creates opportunities for companies to earn revenue through payment processing, financial services, or customer relationships. That helps explain why so many companies want to be part of your checkout experience. Now enter Paze. Instead of being created by a technology company, Paze was developed with the backing of several major U.S. banks. That's what makes this story different. For years, technology companies have become increasingly important in digital payments. Consumers became comfortable paying with their phones. Digital wallets became normal. Buying something online became easier than ever. But that also meant technology companies became a bigger part of the payment experience. Banks watched this transformation happen, and eventually they asked an important question. What if customers could have another option built around the banking system itself? That's where Paze enters the picture. The idea is relatively simple. Instead of manually entering your card information every time you shop online, participating banks can help customers use a digital wallet connected to eligible cards. The goal is to make online checkout easier while adding additional layers of security around payment information. Notice something interesting. This isn't about replacing credit cards. It's about changing how those cards are used online. And that difference matters because most people don't spend much time thinking about payment systems. They simply want the purchase to work. Fast, secure, done. But behind the scenes, every improvement in convenience changes the competitive landscape. Think about smartphones. Years ago, people carried cash much more often. Then debit cards became common. Then contactless payments. Then mobile wallets. Each step made paying easier. But each step also changed which companies became part of the transaction. That's why digital wallets have become such an important business. Whoever controls the wallet often becomes the first thing consumers see when it's time to pay. And being first matters, because payment habits are surprisingly difficult to change. Once people become comfortable with a payment method, they tend to keep using it. That's why banks aren't simply competing to launch another app. They're competing to remain part of a financial habit that millions of Americans repeat every single day. Now here's where the economics become really interesting. Imagine millions of consumers making purchases every day: groceries, clothing, electronics, subscriptions, travel, coffee. Every payment represents data, customer interaction, and a relationship between businesses and consumers. The companies involved don't just process money, they become part of how commerce works. That's why digital payments have become one of the fastest growing parts of modern finance. Consumers expect speed. Merchants want fewer abandoned purchases. Banks want stronger customer relationships. Technology companies want users to stay inside their ecosystems. Everyone benefits if paying becomes easier, but everyone is also competing for the same moment, the few seconds between clicking "Buy Now" and completing the purchase. Those few seconds have become incredibly valuable. Now let's talk about something many people overlook: security. Every time you enter your card number online, there's always a concern about protecting sensitive financial information. Over the past decade, payment companies have invested heavily in technologies that reduce the need to repeatedly share card details with merchants. Digital wallets became one of those solutions. Instead of exposing your payment information every time you make a purchase, modern payment systems often use secure digital credentials designed to protect your actual card information. That's one reason digital wallets have become so popular. Convenience matters, but security matters too. And that's one of the reasons banks believe there's still room for new payment solutions. But here's the bigger question. If Americans already have Apple Pay, Google Pay, PayPal, and traditional credit cards, why would banks introduce something new now? The answer reveals something much bigger than one product. It reveals how rapidly the business of money is changing. Because this isn't simply a story about payments. It's a story about competition. Competition between banks. Competition between technology companies. Competition for customer loyalty. And ultimately, so why are banks entering a market that already seems crowded? The answer starts with one simple idea. The future of banking isn't just about where you keep your money. It's about how you use it. For decades, banks were the center of almost every financial transaction. Your paycheck arrived in your bank account. You used your debit card. You paid with a credit card issued by your bank. The relationship was straightforward. But over the last 15 years, something changed. Technology companies began building products that sat between consumers and their banks. Mobile wallets, payment apps, digital checkout buttons. Suddenly, millions of people weren't thinking about their bank first when making a purchase. They were thinking about the app on their phone. That may sound like a small change, but in business, being the company people interact with every day is incredibly valuable. The more often customers use a particular payment method, the more familiar it becomes. And familiarity creates habits. That's why the competition over digital wallets is so intense. This isn't simply about replacing a piece of plastic. It's about becoming part of people's everyday lives. Think about how often you make payments during a normal week. Coffee, gas, groceries, streaming subscriptions, online shopping, restaurants. Each payment only takes a few seconds, but together they represent hundreds of financial decisions every month. Now imagine that one company becomes the default way millions of people complete those purchases. That company becomes incredibly important inside the modern economy, and that's one reason digital payments have become such a strategic business. But there's another reason this story matters. Consumer expectations have changed. People don't just want payments to work. They expect them to be fast, simple, secure, and almost invisible. The fewer steps required to complete a purchase, the better the experience usually feels. That's why businesses constantly look for ways to reduce friction during checkout. Even a small improvement can encourage more completed purchases. For online retailers, that can mean fewer abandoned shopping carts. For payment providers, it can mean more transactions flowing through their systems. And for banks, it can mean remaining connected to customers in an increasingly digital world. But here's something interesting. Even though technology keeps changing, one thing hasn't changed at all: trust. Money is different from almost everything else. People may experiment with a new social media app overnight, but they're usually much more careful when it comes to the way they pay, store, or move their money. That's why trust remains one of the biggest advantages established financial institutions have built over decades. At the same time, technology companies have built something equally powerful: convenience. And today's digital payment market is really a competition between those two ideas: trust and convenience. The companies that succeed are often the ones that combine both. Now let's zoom out. This story isn't only about one digital wallet. It's part of a much bigger transformation happening around the world. Cash payments continue to decline in many places. Online shopping continues to grow. Contactless payments have become normal. Mobile phones are replacing physical wallets for millions of people. And younger generations are entering adulthood having grown up with digital payments as the standard. That doesn't mean cash disappears tomorrow, or that cards disappear next year. Financial systems rarely change overnight. Instead, they evolve gradually. New technologies appear. Consumers adopt them at different speeds, businesses adjust, banks adapt, and eventually what once felt new becomes completely normal. Think about online banking. Years ago, many people didn't trust it. Today, checking your account balance on your phone feels completely ordinary. The same thing happened with contactless payments. At first, tapping a card felt unusual. Now it's something millions of people do without thinking. Digital wallets are following a similar path. Whether one platform becomes dominant or several continue competing, the direction of travel is clear. Payments are becoming more digital, more integrated, and more seamless. But perhaps the most interesting part of this story isn't the technology itself. It's what it tells us about the economy. Whenever large banks and major technology companies compete so aggressively in the same market, it usually means one thing. That market has become extremely valuable. Billions of dollars move through digital payment systems every single day. And wherever money moves at that scale, competition follows. Because controlling the payment experience isn't simply about processing transactions. It's about building long-term relationships with customers. The company that handles your payments today may also introduce new financial products tomorrow. That's why the payment business has become one of the most important battlegrounds in modern finance. And that's why Paze is attracting attention. Not because it's guaranteed to replace every other digital wallet, but because it shows how seriously traditional banks are responding to a rapidly changing financial landscape. Whether consumers embrace it widely or continue using the payment methods they already know remains to be seen. Markets, not headlines, will ultimately decide which solutions become part of everyday life. And that's an important reminder. Technology doesn't win simply because it's new. It succeeds only if millions of people decide it's useful enough to change their habits. Sometimes that happens quickly. Sometimes it takes years. Sometimes it never happens at all. History is full of technologies that looked revolutionary but never became mainstream. It's also full of ideas that seemed insignificant at first and eventually transformed entire industries. That's why stories like this matter. They're not really about one app. They're about understanding where the financial world might be heading. The way people pay has changed dramatically over the last 20 years. And there's a good chance it will continue changing over the next 20. The question isn't whether digital payments will keep evolving. The question is, who will shape that future? Will it be traditional banks, technology companies, or a combination of both? No one knows for certain. But one thing is clear. The competition has already begun. And the outcome could influence how millions of Americans pay for almost everything they buy. Now I'd like to hear from you. When you pay online, what do you use most often? A credit card, a debit card, Apple Pay, Google Pay, PayPal, or something else entirely? Tell me in the comments. Your answer says a lot about how quickly payment habits are changing. And if you enjoyed this video, subscribe to the channel. Here we explain the biggest financial and economic stories in simple language, showing not just what's happening, but why it matters to everyday people. Because the economy isn't only about stock markets and billion-dollar companies, it's about the small financial decisions we all make every single day. Thanks for watching, and I'll see you in the next video. vidIQ.